love the channel and find it useful in becoming a happy retiree. Subscribe today. All right, we're going to start with Shaun, who joins us from Jonesboro. Shaun, good morning. Welcome to the show. How can we help?
Good morning. I'm going to try and keep this as quick as I possibly can. I'm retiring in about 2 months. I have a 457B, and I've got about $130,000 in it right now. My wife and I are thinking of taking that money on retirement and paying off everything that will allow us to pay off our house, car, any debts that we have. And I'm concerned about tax liabilities, and that's what I want to ask you about, because I'm going to continue working after I retire. I'm actually retiring early.
Got it. So where are you retiring from, Shaun? What in?
I'm a police officer, and actually I'm going to another police department, so I'll be continuing to work full time.
Oh, awesome. Okay, so then you continue to. So you're retiring though. So tell me a little bit how that works. Does your pension accrual just continue? You just continue years of service, or is it a separate entity?
It's separate, and I'll be drawing immediately. So I'll be drawing my retirement from the department I'm at now. And then, of course, I'll be going to another agency, and I'll be getting a full-time check from them as well.
Oh, wow. I didn't know it worked that way. So you go from a police officer to the department, and there are two separate entities.
Correct.
Got it. All right. So how many more years? How old are you, Shaun?
53.
Well, you're young, and the reason when I say young in the context here is that one of my top 5 rules to as you head into retirement, either whether you're 65 or 70 or you're an early retiree, particularly early retirees, is to pay off the mortgage. So one of the 5 key principles to being able to retire early, one of them has to do with the mortgage, getting rid of it, paying it off before you stop working completely. And that's what you're trying to do here, obviously.
Yeah.
And it's super important. So I love that you're doing that and thinking about it. What you don't want to do has to do with, you don't want to use retirement money to do that. And I think you said this earlier, really because it becomes a tax issue. And in your case, it's exacerbated because you're going to continue to work. You're going to continue to have an income. Did you also say you're also going to take your pension as well?
Yeah, the 457B is separate from my pension. I did that on my own.
Yeah. Okay. So you've got this $130,000 in your 457.
Correct.
You could, and how much is the mortgage? How much is the balance left?
It's about 82. About 82,000. That'll pay it off, and we have a car we bought. That'll pay the car. That'll pay off everything. We'll be debt free. Okay,
I love the thought of doing that. It's a key tenet to retiring early, but it's a tax nightmare if you do it from a retirement plan. So my rule of thumb is if you can pay off the mortgage with non-tax money, if you can take a third, and in your case, I'd even be more liberal with that because you have a pension that's kicking in, you're still working. I'd say even up to half of your non-IRA, non-retirement money. If you take half of it, pay off the mortgage, and still have half left, I'd say go ahead and do it tomorrow. But It sounds like most of your investment savings is retirement money based. Is that correct?
Correct. Yeah.
Okay.
Yeah, I've got money in savings, but I don't have enough in it to pay the house off.
Right. So it would run you dry on the non-retirement money side to do it. So and you don't want to do it. So you don't want to do it for your non-retirement money because you need that as it's almost the most sacred money you can get to without paying taxes. And you don't want to use your retirement money because every dollar you pull out is like another dollar in your paycheck. So now you got a pension, you're going to work, you're going to continue to work, and then you pull another $100,000 out. Your adjusted gross income is going to go through the roof.
Correct.
So you're going to go from like a 20% tax bracket to who knows, 30 or even more. So the answer here is, I think, really straightforward for your initial question. Absolutely do not, in my opinion, do not use the 457 money to pay off the mortgage. Okay.
Okay.
However, because you are going to continue to work and you're getting a pension, I would just hyper accelerate the payments with your pension money because you have no choice but to pay taxes on that anyway. It's already coming to you.
Okay.
You might as well now use that money. Maybe you double the mortgage payment every month, because now you've got all this money coming in. You're going to work somewhere else. It's more important. It's still important to get rid of the mortgage. Just use your extra. I would continue to make my normal payments on the mortgage, and then take my entire pension that comes in every month, and then throw that onto the mortgage, so that you can pay the whole thing off in a much more accelerated way than the amortization schedule says to do it. But and it might take you 3, 4, 5 years to do that, which is a much more tax-friendly way to do it, as opposed to just taking a huge chunk out of the 457.
Okay, well that's why I'm asking you, because that's a big question that we had.
Yep. So that's how I would tackle this thing, and thanks for your call, man. Hopefully that helps.
It does. Thank you very much.
Yeah. Have a great rest of your Sunday, Shaun. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.